7.3%, and the net profit as well on account of that has surged, and you're seeing the stock rightly being rewarded by investors locked in upper circuit as we speak. So let's introduce Dr. Dinesh Kumar Likhi, the CMD of Midhani, joining us now on the show. Dr. Likhi, congratulations on a great set of numbers, and it's of course the first one since your listing. To start with, what exactly has moved your top line? I'm going to go to, of course, all the moving parts one by one. But first, the top line, 14% growth there. What were your volumes like and the contribution seen from there? And what were your blended realizations?
See, first of all, we should see quarter-wise performance in public sector like Midhani has to be seen with a corresponding period of the same quarter, rather than from the quarter 3 to quarter 4, because always quarter 4s are better than the previous quarters. So that's one analysis which we have. And the second one is that the fourth quarter, we have one of the major breakdown, which was major revamping plant which was down, has come and has started working now. So these are the two regions which has to be seen for the good performance. Margin-wise, yes, we have focused more on a high margins product, which are special product like titanium and maraging, and which has given a better margins to the quarter 4. So I think these are the couple of regions for margins and the top line growth.
Of your revenues are from those high specialty products, and also then that means, is this top line growth of 14% more or less of a, I mean, we as well understand the seasonality factor of the business, so we as well have compared it on a year-on-year basis, that's Q4 of FY17. So on account of these plants which were shut down and have reopened, does it mean that the revenues in this quarter are optically a bit higher?
Yeah. In fact, this quarter, which is the first quarter, again, we will be taking some preventive maintenance of the shutdowns. But we have to see the quarter 1 from the previous quarter 117, definitely will be better because of this plant coming in operation.
Mr. Likhi, what does your current order book stand at, and can you take us through the breakup between defense, aerospace and the other segments?
See, currently, as on date, our order book will be about 770 crores, which is for about approximately dominated by defense sector, followed by the space sector and the energy sector. So defense must be in the range of about 70-75%, and the space will be about 20%, so remaining will be energy sector.
Okay, understood. So defense, of course, is your mainstay. I just wanted to follow up actually on the previous question I asked you on the specialty products. I know you have increased your portfolio, tilted it towards that segment. It's caused your margins to expand. So what percentage of your revenues comes from that, titanium, etc.?
See, approximately about 40% of our portfolios come from the specialty materials, like we call it special steels as well as the titanium alloys. So 35 to 40% is a portfolio which is high margins. So when we try to focus on that, obviously the margins becomes higher.
And going forward as well, it will be around the same range of 35-40%?
Yeah, it will be in the same range. The product mix, the order book is also over the same nature. Rather, it will be more because recently some order from energy sector is there. So that will rather increase of a specialty materials rather than normal material. It will be more.
That positive commentary is certainly keeping the stock active, and congratulations yet again. It has been a very steady set of earnings for the company on pretty much all parameters. The stock up and away as we speak in the session.